before, people are telling me to record the class. You're not the first people I've taught. I always record the classes. They're always sent. That's why how my videos of my teachings got leaked, because I always record my classes. You're not the first people here. So please calm down. Let me just get started. Okay, so let me get started. So now the strategy that I'm teaching all revolves around what? Market structure, liquidity, and then point of interest. Market structure, liquidity, and then point of interest. So these are the three criteria that I need to find around the market before I can actually start looking for a trade. I need to understand the market structure, what the market structure is saying. I need to find out where liquidity, that's where there's money in the market, that's what liquidity is. And then I need to get a point of interest that can enable me to take my trade. These are the three criteria that I pay attention to before I start looking for entries or before I take any trade. Market structure, liquidity, then point of interest. Now, what is the market structure? So market structure is basically the current flow of the market. The current flow of the market, that is what market structure is. So the pattern and the flow which market uses to go from point A to point B, that is what market structure is. So market structure that's what market structure basically is, the current flow of the market. That is what market structure is. Now, there are three market movements, the three patterns that market moves. So no, there's basically two patterns that market. So there's the ranging market and then there's the trending market. Market structure is the current flow of the market. Now, under market structure, we have what? We have the ranging market and then we have the what? Trending market. Under the trending market, that's when you have your uptrend and then your downtrend. Your uptrend being one market is making a series of higher highs and higher lows, and then your downtrend one market is making a series of lower highs and lower lows. So under market structure, we have two market movements. We have the what? The trending market. Then we have the what? The ranging market. Under the trending market, that's where you have your what? Your uptrend. And then that's when you have your downtrend. So your uptrend being one market is making a series of what? Higher highs and higher lows. That's something like this. If market is doing something like this, higher highs and then higher lows, higher highs, higher lows, higher high, higher lows. This is what it means for what price to be on a what? An uptrend. Then price is making a series of what? Lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, lower highs, lower lows. This is what it means for what? For price to be on a what? On a downtrend. So, like I said, market structure is the what? The current flow and the current direction of the market. The two market movements, we have the trending market and then we have the ranging market. Under the trending market, you have what? The uptrend and then you have the downtrend. Then the ranging market is basically market consolidating, ranging from support and resistance. Something like from here, support, you see to resistance. From resistance is back to support. From support to resistance. From resistance is back to support. From support to resistance. From resistance is back to support. This is what it means for price to be on a range. So there's no particular direction. It's just ranging from one point to another. So this is what it means for price to be on a range. So this is just basically the introduction to market structure. Now, what do I actually look out for when trading market structure? Because I can't just come out and then start trading market structure without having things that I look out for, things that I see before I can say that I've seen the structure part of my strategy. So now under market structure, there are two vital things that I pay attention to. Under market structure, there are two. Number one is the market structure shift, and the second one is the break of structure. So if I see any of these two things, I can critically mark out that I've seen the structure part of my strategy. So like I said, under the structure part of my strategy, there are two things I look out for. The first one, number one of it is market structure shifts. So market structure shifts. Now, what is market structure shift? Now, market structure shift is what? It's basically the indication that a current trend is about to end. That's the trend that the market is on is about to end, and the new one is about to begin in the opposite direction. Let me write it down. So market structure shift is an indication that the current trend is ending and the new one is about to begin in the opposite direction. This is just a definition of it. What does it actually look like graphically? So graphically, this is what it means. It means that when market is on a particular trend, there's a characteristics that that market follows to be on that trend. If it's on an uptrend, you will know that market is on an uptrend when it's making a series of higher highs and higher lows. That is what categorizes an uptrend. Once you see market making a series of higher highs and higher lows, higher highs and higher lows consistently, that will tell you that this market is on an uptrend. Now, anything that deviates from that normal higher highs and higher lows is now giving you an indication that this trade is no longer on an uptrend. Do you understand? Because the characteristics that it's supposed to display is now changing. For example, let's say market is on an uptrend, making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs. Then market now comes, instead of making another higher low here to continue this move, it does something like this and break this last low here. Then you can say that you've had what? A market structure shift. Why? Because the current trend that market was on, the characteristics of it is higher highs and higher lows. Now, markets came here and did what? And made a lower low. What does it mean? It means that this has already deviated from the normal characteristics of price being on an uptrend. So once this happens, then we can say that a market structure shift has occurred. And if market was previously on an uptrend and the market structure shift occurs, it means that this market is now turning to a what? A downtrend. Same as if price is in a previous downtrend, making a series of what? Lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. It now comes, instead of making another lower what? Another lower high to continue this downtrend, it does something like this and breaks this last high here. You can say that a market structure shift has occurred here because what? The normal direction of the market is the downtrend, and the normal pattern that a downtrend follows is what? Lower highs and lower lows, lower highs and lower lows. So once there is a deviation from that current characteristics of the market, which is lower highs and lower lows, if market changes from it, then we can say that there's been a what? A market structure shift. And if price is previously on a downtrend and the market structure shift occurs, it means that this market is no longer bearish. It's no longer on a downtrend, but it's now changing direction to the what? Opposite direction, which is what? To an uptrend. So this is where your market structure shift is. So this is what a market structure shift basically signifies. It's an indication that the current trend that market is on is ending and the new one is about to begin in the opposite direction. Do you get? Now, that's the one thing that I look out for when trading the structure part of the strategy. And the second one that I also look out for is what? Is break of structure. Now, break of structure is different than market structure shift. Structures will get broken. In market structure shift, you're looking for trades in the opposite direction. That is when you're looking for reversals. If you're previously on an uptrend, once market structure shift occurs, market will now start being on a downtrend, which is a reversal. But for break of structure, You're going to be looking for trades in line with the current direction of the market. So market structure shift is the indication that the current trend is ending and the new one is about to begin in the opposite direction. But breakout structure is what? When market breaks a particular key level, be it a support zone or resistance zone, while still maintaining its current trend. Let me write down the definition. So for breakout structure, it's a scenario where price breaks a key level while still maintaining its current structure. Now, this is the difference between market structure shift and breakout structure. Now, if price is on an uptrend, making higher highs and then higher lows, once it makes this higher low here, this last high here becomes a what? A key level, which is now a resistance level in markets. If price happens to come here and break this key level, then there have been a breakout structure here. The market will do what? Make another what? Higher low. This last high here becomes what? Another key level. If price should come here and break this last high, there have been a breakout structure here. So that is it. So breakout structure will continue moving in the direction that market is currently trending. Market structure shifts, we start taking trade to the opposite direction. So a reversal for market structure shifts, and then breakout structure is for continuation. Now breakout structure is even more valid, say, when it causes like a double breakout structure. What do I mean by a double breakout structure? Let's say what? That here is what? A resistance level in market. There was a previous resistance level there. Do you get here? And then price also making higher highs and higher lows while approaching this particular resistance level. It does higher highs, it pulls back, brings the last high here. Does higher highs and another higher low again, pulls back, breaks this last high here. Does what? Another higher high, pulls down here to make another higher low. Now there's a what? A key level here. And at the same time, there's also another key level here, a resistance level in market, and then the last high that market made. If market now comes here, break this last high here, and also that happens to break this resistance level here, this is what? A double breakout structure. This is more effective self to even still take as a continuation. So that is what breakout structure is. So difference between breakout structure and market structure shift is market structure shift will always shift to the opposite direction. Breakout structure will break a key level, be it a support zone or resistance level, while still maintaining its current trend. That is difference between what? Breakout structure and then market structure shift. So here is breakout structure, and then the other side is market structure shift. That's this side. So that is what the things I pay attention to in the structure part of the strategy. So if I open up my charts and be like, okay, because this is how you do it. If you open up your charts and you write down the 3 things you need to look out for before you pick an entry: market structure, liquidity, point of interest. So it means you have to take it step by step. First of all, the first thing you have to look out for is what? The market structure. So either you get a market structure shift or you get a breakout structure. That is when you can mark out successfully that you've gotten the structure part of your strategy. Then you can now move on to the next one, which is what? Liquidity. Now, for the liquidity part of the strategy, there are different types of liquidity, but the one that you need to pay attention to for when picking entries, for example, when you open up your chart, you've got your market structure shift or your breakout structure, then you want to pick your entry, like in the next part of the strategy, the one you need to pay attention for is what? Is inducement. That is the liquidity that are used for picking entries, inducement. So for the liquidity part of it is what? Inducement. Now, what is an inducement? Inducement is the what? Is the first valid pullback that market makes after a shift in market structure or a breakout structure. So what? Inducement is the valid pullback that market makes after a market structure shift or what? A breakout structure. Now, what does this mean? It means that inducement can only be gotten after a market structure shift has occurred or after a breakout structure has what? Has occurred. So you don't look for inducement before your break of structure or before your market structure shift. You have to what get the structure part of the strategy first before you can go on to the liquidity part of the strategy, which is the inducement. So what do I mean by this? This is what I mean. So this is what I mean. Let's say price was on a previous what uptrend, making a series of what higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Then it came here, instead of making another higher low to continue this uptrend. There was a market structure shift here to the downside. So we have gotten a market structure shift. Now, after market does a market structure shift, it will always pull back or kind of retrace into that direction that it shifted structure from or broke structure from, which is something like this, a pullback, then it will now continue what? Going towards the direction that it shifted structure into or broke structure into. This pullback that market makes into that towards the direction that it shifted structure from or broke structure from is what your pullback is, and that is what your inducement is. So this is what our inducement will be. Do you understand? So same as if price was on a previous downtrend, and then there was a market structure shift to the upside. After the market structure shift has occurred, price will also do what? Price will make a pullback towards that direction that it shifted structure from or broke structure from before eventually what? Pushing towards the direction that it broke structure into or shifted structure into. The pullback, it can be a week, it can be a single line week. It depends on the time frame you're on. It can be multiple candles, but as long as it kind of comes back towards the direction that it shifted structure from, that pullback before market continues pushing again. After market does a structure shift, it will pull back towards the direction that it was before it did the structure shift or a break of structure, and then it will continue going into the direction that it broke structure into or shifted structure into. Then that pullback that market makes is what your inducement is. The inducement is liquidity, and liquidity majority of the time will always get swept. Markets will always come out and take out that liquidity because liquidity is a trap, is where money is in the market. So market will induce, that's why it's called inducement. It's induce early traders in, and that it gets them to enter the market too early. You understand? Making them think that this is where market is going to reverse from. Then eventually come out and then use them as liquidity, take them out, and the market will still go to that direction that is meant to go to. But probably people that entered off of liquidity will be taken out. You understand? The market will have enough fuel to continue moving in the direction that is meant to go to. So this is what inducement is. The pullback that market makes after it has broken structure or shifted structure. This one is for market structure shift. Then the one for break of structure is this. So after market has done a break of structure, it will pull back to other direction that it shifted structure, that it broke structure from. Then will continue pushing to the direction that it broke structure into. So this pullback that it does is what our inducement is. Let me go over to the charts and find it. So first of all, on the charts, I will identify a market structure sheet and I would identify what inducement. So if you pay attention here for this particular chart here, I'm going to use this because I took this trade to show what I'm teaching. So there was a previous downtrend here. You can see market was on a previous downtrend, making a series of what lower highs and then lower lows. Do you get? Then lower highs, then what lower lows. Then market came here and what and did broke this last high and made a market structure shift here. So this was where our market structure shift was, because this was a previous downtrend. The market now deviated from the normal characteristics of it being on a downtrend by doing what? By making a higher high instead of making a higher low, and instead of making a lower low. You understand? It made a what? Instead of making a lower high, it made a higher high. What does this mean? It means that a market structure shift has already occurred here. So we've gotten the first part of the strategy for the market structure, because I said either you look for market structure shift or what, or you look for what? Break of structure. I hope you guys can hear me. I hope you guys can see my screen. Let me confirm before I continue. You guys can hear me and you guys can see my screen, right? All right. Okay. All right. So, like I said, the first part of the strategy is what? Market structure. So you need to what? You need to see the structure part of your strategy, either it being a market structure shift or what, or a break of structure. So that's the first thing that you look out for, the structure part of your strategy, either a market structure shift or a break of structure. In this particular case, please, you guys should hang on. I'm coming. Excuse, sorry, I'm back. So, like I said, so either you see the structure, either you see market structure shift or you see break of structure, that will tell you that you've seen the structure part of your strategy. Do you get? So now in this particular chart here, what we saw here was market structure shift. As far as I've seen that, I'm more than happy that I've seen the structure part of my strategy. I can scratch that one out. Then the next thing that I'll move on to is what? My liquidity. Now, for liquidity, I said the liquidity that I use in picking entries is what? My inducement. Now, what did I say? I said inducement is the very pullback that market makes after a market structure shift or break of structure. Please, you guys hang on. Sorry, someone kept interrupting. So, like I said, we've seen the structure part of the strategy, which is the market structure sheet for this particular chart here. After that, we move on to the liquidity part of the strategy, which is what? The inducement. Now, like I said, the inducement is the first valid pullback that market makes after a structure shift or break of structure. So markets will make a retracement into the zone that market broke structure from or shifted structure from before eventually pushing to the direction that that market structure shift occurred into. So for this case, the market did a pullback here before it continued what moving to the direction that is what shifted structure into. So this pullback now is where our inducement is. So this is what the liquidity, and this is what the inducement. Now pay attention. Market will always come out to sweep that liquidity. Market will always come out to take that inducement out before it eventually does the main move that it's meant to do. So this is where our inducement is. So inducement is here. So now, have you seen how I marked out the two involvements in the strategy, the market structure and then the liquidity? So for the market structure, we got the market structure shift. For the liquidity war, we got the inducement. Let me look out for another example again. Okay. So market was what on a previous downtrend here. You can see the downtrend here. Market was making lower highs and lower lows, lower highs, lower lows, lower highs, lower lows. The downtrend was lengthy until price came here and broke this last high that market made here, which means that we've seen our market structure shifts right here. After that, price did what? A pullback towards direction that is what? A shifted structure from. So this was the shift in market structure. After that, market did what? A pullback before eventually what? Pushing towards the direction that the shifted structure into. So this pullback that market made is our what? Inducement. So now I've marked the first part of the strategy, which is what? The market structure shift. And then I've marked the liquidity part of the strategy, which is what? The inducement. So at least now I've marked out my structure part of my strategy and then my liquidity part of the strategy. Structure part being a market structure shift, the inducement, the liquidity being the inducement. I've marked it out in this particular chart, and I've also marked it out in this particular chart also. I think on the for this particular cell here, let me also try and mark out the cell too. Okay. Okay. My network is lagging. Hang on. Don't know why. No, let me focus on just these two that I marked out. So I've talked about the structure part of the strategy, which is number one, we have the break of structure. And then for the second one, we also have a market structure shift. Market structure shift being an indication that the current trend is ending and a new one is about to begin in the opposite direction. Break of structure being a scenario where market breaks a key level in price while still maintaining this current trend. So any one of these that you see, once you've seen a break of structure or market structure shifts, you can pick that as a structure part of your strategy. Then you move on to the next, which is what? The liquidity. The liquidity that I use to pick entries, the ones that I use for this strategy. For the market structure part is MSS and then break of structure. For the liquidity part of the strategy is inducement. Then I've already taught that too. Now it's time to move on to the next part of the strategy, which is what? Your point of interest. Which is what? Your point of... Hang on. Sorry, someone kept interrupting. I'm so sorry, guys. So now I've now it's time to move on to the point of interest part of the strategy. Now I make use of 2 points of interest, not one. I'm going to take the first one in this particular class. Then the next class is when I will introduce the second one. Then give the rules in picking a point of interest and knowing when to use between those 2 points of interest, because market will always react from either this one or this one. So you know the one to use, because most times you can analyze your trades and pick your trades from the first point of interest, and the market will not get to it. There's a reason why. And with those rules I will give out, you actually know when to pick the right point of interest and not the one to pick that market will not slide, or the one that you pick that is very, very eligible to be used as entry. So I've talked about market structure. I've talked about liquidity. Now it's time to move on to the point of interest. Now I make use of 2 points of interest. I make use of what order blocks, and I make use of what breaker blocks. For this particular class, I'm just going to introduce order blocks, and the setups that I actually picked up for this particular class is the one that falls in line with order blocks. So what is an order block? An order block is a zone in price where there are a lot of institutional orders. Now, the institutions, the banks that trade with hundreds of millions of dollars, billions of dollars, those people actually have a lot of liquidity to trade with. So when they place orders, their buy limits and their sell limits, those form order blocks in price. Those are zones that market will tap into and then immediately start having a reaction, either buys or sells. So those zones are where the order blocks are. So the zones in price where there are a lot of institutional orders. Now we have two types of order blocks. We have the bullish order blocks, and then we have the bearish order block. Now, how does it look? The bullish order block being when you want to take buys, you will see a bearish candle, then you see what a bullish candle kind of engulf it like this. So you see the bearish candle first. You see the bullish candle what engulf it. This is what a bullish order block looks like. Then for a bearish order block, you will see what? You will see a bullish candle, then you see a bearish candle engulf it. So this is the bullish order block. And then this is what the bearish order block. So the bullish order block is for when you're looking for buys. Bearish order block for when you're looking for sells. If you normally pick the entry from this order block, this bullish order block, you pick your entry from this demarcation right here. So if you were taking a buy, your buy will be from this demarcation. Then your stop loss will just be what? Few pips. Sorry, excuse me. If you're taking a buy from this, you'll be this demarcation right here. And then your stop loss would cover the bottom of this order block candle, just few pips below it. So this will be your what? If you're taking a buy, this is how your buy will look. If you're taking a sell, your sell will also start from what? This demarcation right here. You get then the SL will just be few pips above the candle of that other block that you picked. Now, also, people will also ask if there are wicks in your other block, how do you pick your entry? And there are rules to that. If the wick of the other block is what? Is smaller than the body of the other block. For example, this is the wick, and the wick is smaller than the body of the other block. If you're picking your entry, you can pick your entry from where? The wick of the other block. Do you understand? If the wick of the other block is smaller than the body of the other block, you can pick your entry from the wick of the other block. But in a case where the wick of the other block is longer than the body of this other block, for example, this is the wick, and it's longer than the body of this candle of the other block here. So this is the body, and it's smaller, and then this wick is longer than it. If you want to pick your entry, you should pick your entry from where? The body of the other block. So now I've already introduced the first point of interest that I make use of. So I've talked about market structure, introduced the market structure shift and the break of structure part of it. That's the one I look out for. I've talked about liquidity, introduced inducement. That's the one I look out for picking entries. And I've introduced one point of interest, which is what? The order block. Now let's now combine all this together and then find our trade. For the examples that I was giving, excuse me, for example, that I was giving, this particular chart, this was only 30 minutes time frame. Now, also for time frames, when making use of time frames, you're allowed to switch between time frames. If you're trading on the 1 hour time frame, if you're trading on the 1 hour time frame, you can switch to your 30 minutes time frame, 15 minutes time frame. If you don't see what you're looking for on that time frame you're on, there's no specific time frame that I make use of. Some people will start asking me about time frames. I don't make use of specific time frames. There's no fixed time frame to find your entry. There's no fixed time frame to see your market structure sheet. There's no fixed time frame. It can work on all time frames. Just make sure what you're trading is in line with the higher time frame. That's just it. So for this particular chart that I was using to teach, so let me go and find it. I'm sorry. Let me find it. I don't know what's wrong with my network, but it's lagging. Excuse me. So this was what I was going to teach. So there was a previous downtrend, lower highs and lower lows, lower highs and lower lows. Then there was what? The break of the last high. Then that was a market structure shift. After that, market did the what? The pullback towards the direction that it shifted structure from, which is this inducement before it started moving back up again. After that, we've gotten what? 2 out of 3 of the strategy, which is what? We've gotten our market structure shift. We've gotten our what? Inducement. The third part of it is now to get our what? Point of interest. In this case, which is the order block. And like I said, there are 2 types of order blocks. There's the bullish order blocks and then there's the bearish order block. The bullish order block for looking for buys. And then what do I say that the bullish order block looks like? You see a what? A bearish candle. Then you see a what? A bullish candle engulf it. So that was why I picked the entry from where? This order block here. Then my stop loss will be below the candle of that other block, which is here. That was why I took my buy from here. Then once price hit, swept that inducement, triggered my buy entry, and then hit CP. Let me see. I have let me see if I can find the entry because it's been long. Come. I'm going, this was I didn't say, but this was it. Market structure sheet inducement. Then my point of interest was this other block. This was the trade. Then hit CP. So that was how I got that first entry. Then for the second one that I used as an example also, which is here. So price was in the previous downtrend, making a series of what? Lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Then this move here broke this last high here. So that means that we've gotten our what? Our first part of the strategy, which is what? The structure part of it, which is what? Market structure shifts. After that, we get the pullback into the direction that market shifted structure from. With that pullback is what? Our inducement. After that, we have already gotten 2 out of 3 of the strategy. The next one is the point of interest, which you use to take your entry. Now, the one I've introduced now is the order block. So what the order block point of interest, you pick your entry. Now, remember, if you're looking for buys, you're going to be looking for bullish order blocks. If you're looking for sales, you're looking for what? Bearish order blocks. So in this case, we're looking for buys, and our entry will be, remember I said if the wick of the order block is what? Is longer than the body. Pay attention, this body of the order block is smaller here, this body here is smaller than this long wick up here. So if I'm picking my entry will be what? My entry will be from the body of the other block. That's why you pick your entry from the body of this other block. Your stop loss below the candle of the other block, the last candle of the other block here. That's where your stop loss should be. Then take profit to get this zone, this other block here. I'll still teach take profit levels. I'm just introducing the strategy to you guys. So the first 2 trades, the same buy here, and then another one here. So that is it for the introduction to the strategy. Now, in the next class, I will get deeper into the strategy, talking about the second point of interest and then the rules in picking a point of interest, because there are lots of trades, point of interest to use for entry that if you keep looking for only other blocks, you will miss your entry, but there are rules to that. It's the same strategy, but you can use 2 point of interest as the order block and then as the breaker block. Sometimes you'll be waiting for your order block, market will not use that, and then we ref from the breaker block. But there are rules to it, which is what I will take in the next class. So now I believe I've taught what like the introduction well, and then I'll accept questions regarding what I just taught. Now remember, this is the first class. There are still multiple times for you to get this. It's not something that you can just understand instantly if you don't. That is why the recording of the class will also be sent to the group for you to rewatch. And then if you don't still understand, you can come and ask questions. But the questions I'm talking about now is regarding what I teach here. I'm being very specific now because I don't want people, some people know how to do this because of I used to be very, very, very calm. Regarding what I teach, regarding what I just taught here now, if I didn't mention anything here, please ask questions regarding only what I teach that you don't understand here. I know why I keep specifying it. Don't bring up another topic into another class. There's my DM is there for a reason. Do you get? So for a particular class, for other people to have time to also ask their own questions because there's time limits. I have other things that I do. So don't use up your this and start asking questions that does not have any relevance to what I'm teaching here. Do you understand? So please, if you just use the question this now, will unmute you and then I can ask you a question, please. Okay, okay. Someone said they have a question. I've already unmuted you. So please, Okizi, what's your question? I asked you to unmute.
Bro, can you hear me?
Yeah, I can hear you. Good evening.
Good evening. See, I want to ask something. When you open your laptop, like you want to start your top-down analysis, what time frame do you go to first? That's what I want to know, please.
This is not what I taught in this particular class. I have a reason for saying to ask questions regarding. I don't know why people don't like doing this. And I said, please ask questions regarding what I just taught in the class. And I also said there's no specific time frame that I used. I mentioned it in this particular. I said I do multi time frame analysis, and I mentioned it here before I even asked if people have questions. And I said, please ask questions regarding what I just taught. And I said, if any question that deviates from that, that is why my DM is there. But most people don't like
Okay.
following this instruction. I don't know why.
Sorry. Anyway, sorry. I'm good. No, I'm good. I just wanted to know that.
I good now.
Okay. Yeah. Yeah, what's up, Nevin?
I'm fine. Thanks for the info. My own question is, when you were making your pullbacks, you mentioned something about you using just a single candlestick wick.
Yeah.
Yeah, so how do we know, like, because there was some, like, what I noticed about your chart is there's sometimes, like, this, your chart now, there was sometimes, like, it was the black and blue candles, series of candlesticks that were the pullback, and there are sometimes that it's just a candlestick that you use as a pullback too. So how do you know when to use a single candlestick pullback and the series of candlestick pullback?
Thing is, it depends on the time frame that you're analyzing from. So if you're on a 1 hour time frame, a single candle pullback can be multiple candles on 5 minutes time frame. Do you understand? So it depends on the time frame you're on. As long as it makes any slight like pullback, any slight retracement after the break of structure has ended, and on that time frame you're on, that particular candle that you are using ends. Like once the particular candle ends, and then the next one that comes makes even a slight push towards the direction that it broke structure from. That slight push it makes before it continues moving to the direction that it broke structure into is your pullback. So on a higher time frame, this is a 3 hours time frame, but it's trade I took on last week. This is the pullback. It was just a single candle, this blue candle that pushed before markets would continue moving to the direction that shit. So I can mark that as my inducement. And then it can still be multiple candles on different time frames. Everything depends on the volatility of the market. If at that moment the volatility is too high, you understand, market will just make a single pullback and then continue pushing up. But if the market is slow, it can continue just making multiple candles. You can just find anyone and mark out as your inducement. Do you understand? As long as it's still within the same zone. Do you understand?
Okay, as long as it's the first pullback after the like break of structure
Yeah, or the market structure shift.
so that's the pullback.
Yeah.
Okay. Thank you very much. Thanks, sir.
Okay. Samwise.
Hello, Tony.
Yeah, hello.
Yeah, please, I want to ask, it's regarding this inducement, the liquidity.
Okay.
Now you said the liquidity is the first pullback. And remember after let's say for example, there is a market structure shift, for example, and there is a
Okay.
pullback, and it goes maybe it was after the market structure shift, it continued on the uptrend, and
Yeah.
then pullback. Can you say that pullback that happened is a break of structure, the first pullback that happens?
No, there's always going to be a zone that market breaks the first structure from. For example, now if there have been a downtrend for a long time, for
Okay.
example, lower highs, lower lows, lower highs, lower lows, there's always going to be the first break of structure that changes the entire trend back to an uptrend. So it can be the last low that it can be the last higher low that market made. If that first higher low that market makes gets broken to the upside, you understand, and the
Yes.
market makes a pullback, any kind of another break of structure that comes afterwards is just mini moves. My own focus is
Okay.
still going to be what on the first place that markets made that first break of structure that changed the whole direction of the market. Do you
Okay.
understand?
All right. All right. I'm clear on that. Thank you.
Okay. And see, I'll take about 7 questions, please. My DM is open because normally the class is supposed to be for 1 hour. And it's already going to 9 o'clock. So there's someone I see. I meet you. So just ask a question now. I'm asking you to unmute yourself.
Hello, Chief. Good evening.
Good evening.
So basically, I usually understood everything you said, but the problem is this not really a problem, just like a clarification. This market structure shift, yeah,
Okay.
when it happens, like the trend is bullish and market structure shift happens. So the next
Okay.
thing I should be looking out for is now the inducement. Like that
Yes.
GJ you pointed out, it was like a single week, like that boy said, like that guy said, so a single week. When this thing happens, if the other block is at the extreme of that valid break of structure that is still what is it called, that is still bullish, will you now take it as that POI for the bearish MSS that have just happened? I don't know. This thing will be
I
more.
don't really understand your question.
If you go to that GJ now, the chart you showed, though when you were describing it, the thing was lagging, so I didn't quite speak it very well. So if you check the GJ, it was buying and then started selling. That yes, this current one now. Yeah,
Okay.
that one. So as that pullback happened, there's POI at that top at the extreme, but then you now use the breaker block.
Like I said, there are different point of interest that I make use of. I only introduced one. I didn't use an order block for this trade. If you pay attention, this is not an order block, it's a breaker block. And like I said, there are rules in picking a point of interest, which I said I would take on the next class. There are 2 points. I didn't take this trade from an order block. You can clearly see this from a breaker block. There are different 2 points of interest that I make use of. And I said there are rules to know which one to make use of. And then I will go deeper into the second point of interest in the second class. It's just the introduction to the strategy. Don't know if you understand what I'm saying. Just introduce the other block is not what I used for this chart. There are different point of interest that I used in taking my trade. So KP.
Good evening, Tony.
Good evening.
Can you hear me?
I can hear you.
Okay, so when you were teaching the topic, I understood until when we got to the inducement part. So there are some charts, like I'm about to add something that is not related to what you taught, but please pardon me. There are like what you are teaching now is Forex, yeah, but I still study other charts like synthetic indices. You get me?
Okay.
and the chart in synthetic indices is always smooth, more like a textbook pattern. You understand me?
I understand.
It's more like a textbook pattern compared to Forex. So my question here is the inducement you explained for us, does when you are marking your structure, the higher high, the higher you lose, and the break. Okay, my question is based on the break. The break, does it have to be a candle close, or the
Yes, now
break can just
for
be
a break of structure to happen, this is actually this thing asking is around beginner class. For there to be a change of character or break of structure, price has to break above that zone and close above it. This is it's in candlestick patterns now. That's where you know your resistance break and support break. For there to be a break of structure or structure shift, it has to break that zone and close above it. That is just it.
Thank you. I understand. Thank you.
Tunde, people comment that they have questions. Wait your turn now. You can clearly see I'm going turn by turn. Yeah.
Good evening, brother.
Good evening.
Please, I have a question regarding after in some of the charts, after there is an inducement, most of them comes with like double order block. So I don't know whether if it is valid to trade the first order block
I
immediately
would,
after the
like
inducement,
I said I will
or
give
should we
rules
trade?
picking point of interest. This is just the first class. Like I said, before I sent link, I said there are still things that will be taught in the second class that you're probably going to start asking the questions on now. But everything I've taught now, this is literally all you need to know about the first class. In the next class, the things I will teach, I've taught different classes enough to understand what you guys need to trade the strategy. So what I'm teaching now is everything that regards what you need to know for this particular first class. There's still another class again that will teach different things, and that will give you more clarity. For now, you can just be backtesting with what you are taught until more is being taught. You don't just understand everything in one particular session. There are, like I said, there are different points of interest, and there are rules in picking a point of interest. And I've not taught it yet.
Okay, brother, please don't be angry. I would really hope that in the next class, because when we are making those drawing on your charts, like it was lagging. Honestly, it wasn't really corresponding with what you were
Maybe
saying.
from
So I
your
don't know whether
device. It's
if
not
it is
lagging
your
here. It's
network.
not. I don't. It's not from here. It's not from here. Please let me ask another question. Because I'm CB. Don't let me. It was not lagging. Chase. Please, what's your question?
Good evening.
Good evening.
My question is why the market is making the series of higher high and higher lows, and the market gives us an MSS. What if before the MSS and it gives us a pullback, like maybe on the lower time?
I said inducement. I said inducement happens after, not before. If you that's why I said most of you guys should just come and rewatch this recording. When everything they can possibly ask me, I defined it here, even how to pick an order block. I said inducement does not happen before. I said if there's any inducement, the pullback before is not an inducement. The definition says the pullback after. The keyword after is there for a reason. It means it can only be an inducement after. So the ones happening before, that's not inducement. Don't pay attention to them. See, I will take two more questions. Any question again that seems of value, please bring it to my DM because it's already what above 9:01. It's more than 1 hour. So please, these questions, I know I'm very, very specific with what I teach. So I know the things that you're supposed to know, and then I actually teach them well here. So who's the last person that said they have a question? Striker.
All right, boss. Good evening. Can you hear me?
Yeah, I can hear you. Good evening.
I just have a question on picking your like on the entry. In the entry, I'm confused on where to say like on where you pick your entry from the wick and from the body. I'm confused on that.
Yeah, I also mentioned it in the class, and I said there. I see now. I gave a diagram here. I said, where is it? I gave a diagram in picking an order block. I'm trying to look for it. I drew out an order block. I said if the wick is longer than the body, you pick your entry from the wick. If the wick is longer than the body, you pick your entry from the See, if the wick of the other block is smaller than the body, you can pick your entry from the wick of the other block. If the wick of the other block is longer than the body, you can pick your entry from the body, which is the demarcation here. Literally anything that I can ask, I've already defined it here, and I already gave most, maybe not here when I said it, but please, you guys should go and watch the recordings. This particular recording, I already gave everything. Do you understand?
You get the break.
Although I think I would take just like 2 more. I've seen that most of the questions that people have is about things that I've already mentioned, but most people are not paying attention. So this Zoom user, Odogo FX,
Yes, but can you hear me?
can hear me.
Yeah, okay. What if it takes like a two bullish candle in when you are picking your other block? What if it takes like two candles there? Which one? How do you take your trade from there? Like how do you mark out to
Switch
say
time
exactly
frame,
what
switch time frame, switch time frame. If you switch time frame, that 2 candle will become 1 candle. You pick your other block. Switch time frames to a higher time frame. If
okay, and you
you
switch
see
it
a
to like
clear
higher
other block.
time frame, right?
Yes.
Uh, Okay, there's one thing that Bitcoin did. Sorry to like, there's one thing that Bitcoin did on
Please
that.
just send that one to my DM, please. I don't think I just send it to my DM, please. Let me just ask another question. I want questions
Good
relating
evening.
to what I teach.
Good
Okay,
Please.
evening. Good evening, bro.
Understand?
no
Yeah,
problem.
good evening.
Yeah, the question I have is about the inducement.
Okay.
Because the mark, you said you said if market structure, for example, is going in a series of higher highs, higher lows. Let's say in an uptrend, you have higher high, higher low, higher high, higher low. It's breaking structure, and it
Okay.
creates the pullback. What if price creates the pullback, and it's like for the inducement now, and the price is coming back to like sweep inducement. No price will sweep inducement and tap your zone before it bears. So if
Yeah.
price is coming back to sweep that inducement, how can I differentiate it that okay, it's just sweeping the inducement, it's not breaking that man pull back as a swing structure, like as a lower low. It's not breaking it down to change the trend to downtrend or something.
You can't be sure. Just analyze your trade, and then there's a reason for stop loss. There are other things that will be made for your trade to be valid. If you have gotten a valid shift in structure, you've gotten that pullback, and the pullback continues moving in that direction that is meant to go to, and the market comes, that's already meeting 2 out of 3 criteria. Like I said, there are rules. I don't know if you guys understand that when I'm saying that there are rules that will still be taught.
All right.
There
That
are
was just
rules.
what I was just talking because the pullback looks like it also looks like it's like a lower low, like just it's like a lower low for me.
Don't worry. The next class I will give more insight. There are rules in picking a point of interest, which I'll give in this class. Please,
All right, thank you, sir.
done with this particular listening. I will send the recording when it's done processing. I don't want to come to the group and say, after send recording, it will be sent when Zoom finish processing it and they send it to me. I will send it to the group, and with the passcode, you guys can watch. Then you get more clarity, and then you back test with what you learn. Then, if you still have any confusions, the questions regarding to what I teach, please, most people know what I'm saying. People know they hear word. It's in my DM. According to what I teach, most people, I can literally stay here and say something now, and I'll be like, "Don't do this." They'll ask me, and they will do it. I don't know why. So I'll send the recording to the group when it's done processing. You understand?